Hey everyone, welcome to another Level Logic video. Just quickly, if you'd like to check out the indicators, head on over to levellogicindicators.com. The link's down in the description. What we're going to cover today is a couple of trades I took during London on Tuesday, and also a trade review of a trade that you could have taken during New York. So these three trades here, we'll just go over the indicators individually for each one to see the confluence stacking up and how you could have got involved. Okay, so here I've got SEIZ set to the daily time frame, and you can see there we've crossed the median external high, which means we've taken out the previous day's high, and we're now trading within that 50th to 75th percentile range. So we've only got roughly a 25 to 50% chance that we're going to go much higher. So it's a good time to start framing shorts if we have the other confluences available. Now, as we opened the 2 a.m. new 4 hour 2 a.m. candle, nothing much happened, and we can also see we've got these two relatively equal highs here, which I really wanted to go before looking at getting in any trades, because I think as we came into 2 a.m. and into London, this was going to be used as kind of an inducement to get shorts in early, and then they were going to attack these highs, which is what ended up happening. So we did end up taking those highs, and we had a few attempts at breaking down, but we didn't really get some great price structure in here, and we didn't have very good confluences with the indicators yet. So what ended up happening was we got the new 12 and 4 hour candle at 6 o'clock, and Moore was telling us we got pinged with a lot of alerts for a number of time frames that had opens to retest with high probability. You can see here I've got it set to the 4 hour. So basically the 4 hour showed the highest probability. So I went and looked at, I went and set more to that chart time frame to look at that one. And you can see we've just crossed the median line there. Okay. And this open line here, this dotted line has an 86% chance to get retested. So looking at our other indicators for confluence, I've just turned off more for the time being. We can see here that I've got MERA and HIPA set, and we've got HIPA showing us a lot of internal range liquidity here with quite high probability to get taken out by the end of the day. And we've also got this red signal alert, which basically means that we've not only do we have a bias of internal range liquidity to take out, but we've also taken out some external range liquidity. So we've swept the some significant highs. So this is alerting that it's quite possible now that we could start to revert and take out some of this internal range liquidity. MERA, we've got it at the, so you can start to see we've started to color candles in red and started to get some early warning alerts because we're in the extreme premium of the range of the 1, 4, and 12 hour. So things are starting to look interesting. We've got more with that high probability 4 hour open retest, which at a minimum could get us to a break even if we get some nice entry confirmation. We keep taking out highs. So we've got kind of like 4 drives happening here where we keep taking out early shorts. And we've got the other confluences there as well. So another interesting thing to look at with SEIZ when you're getting involved in an entry is to also look at what the dash is telling you in regards to low time frames versus the mid time frames and the high time frames. So if we're trying to get involved in the high of the daily candle because we're above the 50th percentile, we also want to have kind of significant stabs into liquidity and high-ish percentile zones on the lower time frames because they're the ones that actually form the pivot first. Okay, so here you can see that the 15-minute has opened up and done a quick manipulation up above its previous 15-minute. So if you look at these candles here, it makes a bit more sense. So we've got the 4 hour that's opened up and that's attacking its previous high. But then we've also got at an even higher point, a 15-minute has opened up and it is attacking its previous high as well. Okay, so this is going to make the pivot first that will lead to the 4-hour breakdown. So that can also give you a good indication of a final manipulation if you get that up into these higher percentile zones, external zones. Because if you think about it like this, maybe this will make more sense as well. If this is my 4-hour on a really high time frame, in here you're making your smaller time frame in the same shape. Okay, so this is what happens first, for then this to happen. Okay, so that's what we're trying to get into here. Now that I've got all these confluences lining up across all the indicators, I dropped down to the 15-second to see if I could get some early signs of order flow shift, and I got a sort of a version of one of my favorite entry models, which is where we sweep the initial reaction before breaking down. So we've come up here, we've tested the 15-minute median, sweeping the previous 15-minute high. We're also above the previous 4-hour high, so we're sweeping that at the same time. Then on the 15-second, we've pushed up. Then in this next candle fractally, we've come down and we've sort of formed this little range in here. And then this candle here is the important one. It's come up looking like it's going to take this higher. If you imagine if this candle's live and forming, it's pushing up bullish and looking like it's going to take this high. But what it actually does is just sweeps that first reaction after the pivot candle and takes out any close stop orders there. And so once that candle closed, that was a trigger for me. So I could get a really tight entry here with a tight stop loss, with the thinking that this is now the last sort of raid of liquidity and would be a protected high. So my stop can go above that and enter on that candle close, and I'm targeting the hyper liquidity below. So this was the result here. As you can see, I was originally targeting some of these levels down here, which we didn't quite get to, but I did take a partial at this low here, because what often happens, if you look at the higher time frame candles I've got over here as an example, is when you have this pivot, or what you're expecting to be the pivot high candle, which is what I was trading here. So that's this middle candle here. I was expecting this to be the pivot candle and then this high not to get taken out to run lower. But your main hurdle for this to go lower is to start taking out the higher time frame candle lows, which are support levels. So you've got this one here, and you've got that hour here. So you can see as soon as we actually opened up the new hour, which is this vertical line here, we very quickly swept that previous hour low and went up to run the highs again. So even though that last trade was a partial and then a break even, I don't give up there, because all the confluences are still stacking in my favor. My rules allow me to have a few goes at trying to catch the trade. So as we swept that previous hour here and ran up, we've now got a significant SMT with ES that's just formed here. So this is potentially just a manipulation move. Now, the previous 4-hour more open retest that I was using for the previous trade over here, over here, that has been retested now. So that open retest of the 4-hour is no longer relevant. As you can see in the more dashboard, it's no longer showing up as an active open to retest. However, we now have some other ones. Mainly the 9-hour, which has an 83% probability of getting retested, and it's a nice distance away for quite a nice trade to happen as well. So I turned more to the 9-hour to see where I could target, and that looked good to me. So I looked for some more confluences to get involved. So you can see here, MERA is still showing me that I'm at the extreme premium of the range. I've got that SMT, and I've still got all my hyper liquidity to target down below. That's still active as well. Okay, so now I'm sort of hunting an entry. Now we've got our SMT, we've got our hyper targets, we've got MERA telling us we're in the extreme premium. We've got more 9-hour telling us that we've got a high probability retest below to target as well. We're also SEIZ telling us that our daily we're above the daily external median, so that's a good point for looking for mean reversion as well. So now I'm hunting for an entry. So here, as we've pushed up and taken out this high and done the sweep, we've started to break down some little candle structure in here. Then we've moved up. We've looked like we've headed down as well, but we've actually just made some equal highs here. We've gone up, we've swept them. So again, that's my initial reaction sweep. We have held this as the protected high. We've done a last final sweep, and now this is my protected high. So I've entered as soon as this candle here, that little candle there, closed below that pivot candle. That was my my entry point. So that's where I entered, and stop above here as that's the protected high, and targeting the 9-hour open for a retest. So this is the result of that trade. You can see the data worked out really, really nicely. We've taken out some of that internal range liquidity that HIPA was showing that had a high probability. But more importantly, we have that 9-hour open retest that had an 83% probability of getting tested, which it's smashed. And then CPI has immediately reverted and gone the other way to attack the highs one more time. So next up, this is just a review of how you could have got involved during New York Open. So we've come up, CPI has taken out the previous high, and then we've sort of trickled down a little bit, forming this internal range liquidity here, and we've got that data high there. So that's a bit of a dodgy place to put your stop loss if you were going to short this. So it's built up, engineered this liquidity to power itself up again to take out that data high, and then we've got New York Open at 9:30, where we've started to get some signals from more again of other open retests that are available. This 9 a.m. 1 hour one being one of the good ones that you can get, because it's often a good sign that New York Open is doing a manipulation up or down first that you can get involved in. So we've taken out that previous 1 hour high at the 9 a.m. Open. Okay, so we've got an 83% chance that this line here will get tested, and this is the same open for this 3 hour and this 5 hour as well, which also you can see have a high probability. Okay, so then looking for an entry, we've got all our confluences. MERA, we're in extreme premium. More, we've got some open retests with high probability to attack. HIPA, we've got some internal range liquidity to attack as well. SEIZ, we're at our daily external median high. So now we're just looking for some entry confirmation. So we had an SMT with ES at the top with this aggressive manipulation up just to quickly take out that high one more time. And then you can see here we've started to get some breakdown. You've got a little IFBG in there, and you're starting to take out some candle lows. So basically, we took out this pivot low here, which happened before this pivot high, and then that gave you a nice retest of these bullish candles here as the order block to get involved. So here you can see we've taken out heaps of this internal range liquidity down to this low that's within this bigger range down here. Okay, so a lot of this had 90% probability by end of day to get taken out. So we've ran all of that London and a bit of that Asia liquidity all the way down there. So that would have been a nice trade to get involved with. However, if you didn't manage to get that because it was quite quick, you could have got in on these retests, which I'll just go over now. Okay, so just to show you how you could have used SEIZ to help you get involved with a continuation trade if you didn't catch the high, which is totally fine, and sometimes it's safer just to go for the continuation trades. So SEIZ here is set to the 4-hour time frame. Okay, so in order for a pivot high to form, you need one candle that is higher than the previous candle and the candle that comes after it. Okay, so we've taken out the previous 4-hour candle high, which is this interval over here. Okay, so if we're expecting this is now our pivot high, then we're expecting the next 4-hour candle not to go above this high. Okay, so I've put these high time frame candles over here to make it a little bit easier to understand. But if this is our pivot high, then we expect the next one to retest somewhere in this candle and form its high internally within this candle, not above it. Okay, so this is what we're trying to get involved with. So you can see here, SEIZ is now orange, which means that it's internal to the previous 4-hour candle range. So we've come up, crossed that median and crossed the 75th percentile. So there's only a 25% chance that if we are going to stay internal to this previous candle, that we're not going to go much higher than this. So that's a good time to start looking for continuation trades down on the lower time frame. You can see the exact same thing happened again, which because now we're trending, these 4-hour candles are trending and these highs are becoming protected. So again, we've come up, we've tested the internal median on the 4-hour, and you could have framed some low time frame entries here as well to catch the move down there as well. So I hope that helped with everything. I'll continue doing these reviews, and as I do more and more of them, you'll start to see how all these indicators build confluence in a very similar way, so that you can get involved in some really nice trades. See you in the next one.